The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this Friday, the 15th of March, halfway through the month. Whoa, flying along. So, this is going to be very important. See a pattern that I call the falling axe? This is a lower series of highs and much lower lows. Then it stops at a certain point, makes a turn, tries to break to the upside. So for me, the Dow, if it can break above, close above 25,964, let's call it 25,960s. A close above that would say that's a break to the upside, and that there's a really good chance that you're going to try to tackle in the Dow, the 4th of March high of 26,155. Almost getting to the high of the February the 25th. Now, I'm not sure just what, it could be options expiration, could be anything, it doesn't matter. But yesterday, even though I was looking at the Dow and expecting further weakness, not much, but further weakness, at the end of the day, when I was looking at some of the brokerage stocks and certain areas, I was saying, hey, that is very good action. So we added some longs today. And at the same time, I'm looking at it and I'm saying, earlier on, there was this huge, the futures were up really quite big. And then by early morning, by the first 20 minutes or so, the market had given back a chunk. The Dow had given back a chunk. And now the Dow is up 184 points. I don't care whether it's options expiration or anything. Price is the arbiter of a trend. And this is saying very, very good action. The MACD has not crossed positive yet. Stochastic still very weak at 46%. But look at the price holding above the 9-period moving average. So this resistance could even happen today. Is going to be very important. Number one. Number two is, if you're looking at the S&P, earlier on, when it was failing, even though it went slightly higher than the 28, 21, 21 high, and we should show you something here. So this is the 120-minute chart. We're in leg D right now. So this goes, make it real simple. This is peak A, peak B, peak C. Remember, we're always looking for a D. D's where other things can happen. And then always put in an up arrow if you're in a buy mode, which we are. MACD is strong, but the stochastics at 82%, but way off the high that it was yesterday at this time. So I'm looking at this and I'm saying, okay, this is really good action. I can call this a leg F, but if the MACD by the end of the day or Monday starts to cross positive, there's a good chance that we're going higher. We already made a new recovery high from the previous high of the 4th of March at 28.1688. So I'm putting in, this is what we do in the Chapman Wave methodology, F/B, meaning to continue the move up, because from the low that was made back in the 2680 area, that peak D completed a move. The MACD, stochastic, everything turned down, price turned down, went under the 9 and the 14-period moving average, so it gets a down arrow. But we did not break underneath the 2680 level before we made this new recovery high. So let me have some water. So what we're looking at is, if there is a turn, a deflection to the, whatever it is, could be options expiration. We've already had to move down. Now we've got to move up. If there by the end of the day, say, I'd say to my subscribers, if the Dow is up plus 80 between 1 o'clock and 2:10, there's a real good chance it'll close nicely higher. And if it gives back a chunk, that means, whoops, be careful. But now we're up 205. So there's a lot of buying going on. It could be options expiration, but price is price. But the MACD has not yet crossed positive. So it says to me, keep it in mind, there's nothing wrong based on the price, especially with the doji candle going both above yesterday's doji high and the previous day's high of 28.20. What was that? 20. 1. Yep. 2821.21, and now we're at 2825.19. As I look at it right now, the fact that the weekly chart is still so strong says to me, hey, that's your guide. The MACD, stochastics at 94% in the weekly chart. That is really important. There's a much greater chance now this is a B and not an F, especially if you close at the highs. But wait a minute, the QQQ has done the same thing, and it is challenging this longer term, sort of intermediate term, let's say on the daily chart, uptrend line resistance, Chapman wave inside track buy zone. I didn't put in the lower level. I just thought it was not important to make the chart a little bit cluttered, but I'll do it now. Green to go above, red to stay inside, and there we are. So far it's on the outside of the green line, the daily chart. Weekly chart is really strong. It's even above the next resistance, the repellent line from November the 9th, 175.58 in the QQQ NDX 100 trading vehicle. Very good action. Cannot complain. All right. Now, the next, so then this goes F/B. My thinking here is just way too high for an F, and it's probably a B, and that means we should still go to a C and a D. Very good action, right? Let's go on. IWM hasn't even taken out, or it hadn't yet. Yeah, it's close to. It hadn't earlier on, but it hadn't taken out the high that was made on the 13th, 3 days ago, of 155.73, and right now it's at 155.68. Oh, it's really close. So it could still do it, but it is lagging greatly. So as far as I'm concerned, the evidence says that this selective move to the upside I spoke about in the SMHs in my update at noon. Look at that breakout to the upside. It didn't take out on the downside the starting point low for the buy signal to buy mode. Went from 106.27 peak D on the 25th down to 99. We hit the 99. That was my target, first target. I thought there might be another target to the downside, but we first had to see how it handled 99. Boy, did it handle it. 99 is now up 7 points at 106. And I'm checking to see any calls coming in. I promised that I would be very diligent about that. Told my engineer, I'll keep it on my radar right here. I'll just keep looking down to see it. So here's this V-shaped pattern, very strong. I'm going to call this an E/B. My preference right now is to call it an E, but I like to just be a little conservative and say, hey, the MACD hasn't closed up, cross positive, and stochastic still at 67. What's the reason for this move? Well, if you look at Lam Research, LRCX, very nice spike to the upside. If you look at Intel, very nice trading pattern, but now it's stalling at 54.35. This is a F, maybe a /B, but it's an F for now, but only a leg C in the weekly chart. And if you look at, what was I missing there? Applied Materials. Applied Materials had a spike, didn't take out the left side high from back in February, around about 41.20. It's trading right now at 40.48. I'll discuss all of these in great detail when we get back. Basil Chapman, Tiger Technicians.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So we were looking at the E-minis for a moment here. The E-mini just went right up to the 28, 32, 33 resistance. This is the daily chart, and it's so fascinating when you look at this and you're either trading it or you're selling it to get clues. It was just nothing. It was making this cup formation, beautiful left side, right side price cup formation, started to pull back, was making another one, and then right here, looking at it, and I said, this has gone, the MACD has gone positive, stochastic's positive. Where can this go to? Can I retest that high? Retest that high. It just broke right out from the 2820, 2821 level on the June E-mini, and it's trading now at 2832.50. Calling this a G/B, I think it's going to probably take a little bit of a breather here because the 5-minute chart has gone to a leg E, a little bit extended, so it should pull back. But if the 10-minute chart is still only in leg C and should go to a leg D, wow, that's quite something. So we're going to be following this during the show. So let's get back to our story here. And the story is that NVIDIA, question in the den, NVIDIA trading at 170.15, up 4.59, up 2.75%. That sounds fantastic. You know what? It is off the all-time high back at, did I type that in? Back at right there, also a G. And that was a G/C, turned out to be G at 292.76. And that was right there, week of October the 5th. And it happens to pull back a little bit. And it goes down to 121. It's trading right now at 170, 50 points higher. That is really good. But look at it. It's in leg D. It's a very unusual to see a pattern from a low going peak A, pull back, peak B, pull back, a little nominal peak C, pull back, and now leg D, and it's still in the lower. What is that? Eighth tile. I mean, this is really. Maybe not eighth. Yeah. From that high, it's in the low range, much lower range. So it's still telling us there's a little bit of problem with NVIDIA graphic processing for workstations, games, and mobile devices, etc. So this is, as I said before, this is a rotating market, and through the rotation, we found and questioned the Dan is the TVIX ever going to make a bottom, trading right now at 25.28. From my eye, this is not any technical analysis based on measurements or anything like that, but from my eye, I'm looking at this and I'm saying at 25.22 with the stochastic now in the 12.63 area, it's saying that the resistance in the 27 to 28 area is very strong. At the 24s to 23s is probably something that you've got to be prepared for. But I think we'll know a lot by the end of the day going into Monday at this time for three reasons. One is, if you look at the TLT, in other words, the question is it going to ever make a bottom? And my answer is, I think we're getting close to some kind of bounce, but I'm not saying a bottom yet. But if you look at the TLT, look at the interest rate. The TLT kind of measures this, a 20-year T-bond fund, treated more as a T-bond fund than just thinking of it purely as interest rate, just for the moment. And you'll see that it's still stuck in a range. I drew these purple lines, Chapman wave, parallel one-to-one expansion, hasn't quite gone to the one-to-one, to the 120, no, the 118 area. The low that was made was 118.64. So that should say 118.20 is kind of the measurement that I'd be looking for. But what's really important about this is if you look at the TNX, and here we can talk about interest rates because this is the 10-year rate. A lot of things are benchmarked on this. You can see that there's a lowercase h. Oh, I thought I'd get it ready and I forgot to do that. I'm going to squeeze this weekly chart so you can see it. There's a pattern that I call the lowercase h that comes down sharply. And then there's a little h pattern, a lowercase h, and it retests not necessarily the low, but it goes close to the low, then it bounces. And then that bounce has yet another little arch, and it either just barely goes above or it doesn't go above at all. And then it looks like it wants to test the low. So this lowercase h goes to a lowercase m formation. That lowercase m formation says that you can go have a third h, especially if you haven't taken out the left side arch. But first, there's a good chance you're going to get very close to, maybe even test, maybe even break the left side low. In this case, 225.54, 2.554. And that was the low of, I think it was January, the week of the 4th of January, when the market made its low on the December the 26th and started rallying. Then the bonds made their low. And that was the first week of January at 25.54, rallies up to 28, 27.99 to be exact. And now it's come down, and today's low is 25.80. So this is the pattern that we're looking for. And you see the stochastic is flat at 23%, showing no strength at all. The MACD is still making this W formation, but the histogram has improved a little bit. The price is really not that much better. It's getting close to a rebound. So let me put the little package together. I think we're getting close for yields to have a rally, for the TLT to drop a little bit, but we aren't there yet. That's number one. So I see the three things. One is part of the package that says selectivity with individual stocks really pushing. And you got that clue right now because let's look at, what is it called again? BA. There it is. BA is up. Now it's a little below the 385 level, but it got there. So it hit the 385 for the options expiration. Now we'll see if there's still strength to push up again. So individual stocks, rates, it's sort of separate, but it's going to the question of the TVIX, the VIX index, the VIX itself. Let me show you something very interesting here. Look, where did that go? VIX, I'm checking to see any calls. No calls yet, okay. The VIX has gone to a leg F to the downside. It's made a new low. That is not 1341, 1338. This is still a continuation of a new leg B to the downside. The weekly chart is extremely negative, which should be very bullish with a triple-digit Dow gain. That's exactly what we got. Strong double-digit S&P. That's exactly what we got. So as long as the VIX is trading, I thought there was going to be a little bit of a bounce in the VIX today. Instead, it's the exact opposite. There is a pullback, a sharp pullback. It's down 6.3%, down 0.85 at 12.65. And that says to me, as long as the VIX is remaining in the 13s to the 12s, especially under the teens, there is buying pressure. So I'm going to try to keep it as simple as possible. The reason why we had a short, which we got stopped out very quickly for a very, very small loss. Otherwise, we're in long positions, and the long positions are spread out. One of the reasons being, this is a very diverse market, and they're not looking. Goldman Sachs should be leading the pack, and it's just, what is this big up 0.38? The XLF is not even moving, even though yields. No, the XLF is up 5 cents. It's holding steady. I'll be right back. Basil Chapman down.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Look, so the different factors we were looking at. The euro is just stuck in this range right here. The MACD in the weekly chart, the daily and weekly chart has crossed positive. The stochastics at 52% in the daily and 28% in flat in the weekly, and the monthly is 14% in the stochastic. Yeah, from oversold levels, you can get bounces. So far, I want price movement. I want to see the technicals improving with price. I want to see the euro up at the 1.140 by Tuesday, Wednesday of next week. Not trading in the 1.13, perhaps even 1.125 area. That would not be good. And the dollar had a fabulous bounce yesterday after a lousy Wednesday. Thursday was an inside day, hit the 14-period moving average and stopped dead. This morning, that was the high, and now it's trading at 96.58, still within the weekly chart of this cup formation, still acting pretty well. Now, I've got this as a C. That's really a C, but it's a gray C because by 97.71 in the dollar index, we did not take out by 1 penny the 12, 14, 18. That's December the 14th, the week of the 14th of 2018, 97.71 high. Went exactly to the door, didn't open it, just got repelled. So we've got to watch that real closely. Now, what's important is that the dollar weekly is in a trading band, sideways, and the monthly, MACD is still good. The stochastics pulled back, is still at 83% and good, but the price is holding very nicely above the 9-period moving average and the 14. If the dollar closes on a weekly basis below 95.60 at any stage, I just have to look at this and say, you know what? Maybe we got new rotation, but for a year, almost a year exactly, it'll be a year on April the 4th that we're long the dollar. So far, it's held very well. And now you got a new high on the stock charts on the dollar. I tend to go with the TradeStation one that I use, but if you've got one that says that's good because that's started leg C in the monthly chart. But it is only the index, so I don't know what to say. So I don't get that yet. Okay, so the currency is very important. Yields are kind of important, but they're important for another reason. They're important because in the HGX index, which is trading up a little bit, up $1.51 at 286.76, there is really not being, let's see, Toll Brothers, yeah, they're just kind of stuck. They're not really moving here like they should be. And this whole rotational aspect is quite important. So I'm trying to put all the different factors together. Remember yesterday, Stephen mentioned HYG, and iShares trading and made a new high today, went above the high that was made on the 26th. Am I looking at the right thing? Yep, the high yield chart went above the 26th of February high of 85.87. We're trading right now at 85.88. And that's still also leg C in the weekly chart. Very good action. Money is going into these corporate high yields. This is really interesting. If you look at junk, GANK, same sort of thing, but that was lagging, and that still has not made a new recovery high above. It's at 35.71 is the high today. 35.72, 72, 72. 35.72s, the 26th, 7th, and 8th of February this year, with the double top highs of G/C, came down to the 35.25 area, and now we're at 35.70 with a high of 71. This is so far the V-shaped pattern. Normally, and I discussed this in my, let's see if I can do this right now, in my e-mini chart that I send out to subscribers every day, and I was supposed in the den, ESM19, what I'd said is in the 120-minute chart, we have a cup formation. And we know that in the Chapman wave methodology, in a cup formation, what you want to be looking for is a decisive break to the upside, because if it just stalls a fraction above, it's like the lowercase h, the dreaded H pattern. This, in fact, is a positive Y, inverted Y. And look what's happening. 25.2650 was the high back on at 4 o'clock on the 11th. And then it pulls back to 28.09, and now we're trading at 28.32. And this is very positive. So this cup pattern, and that's the reason why we always do pattern. Doesn't matter. Doesn't matter that it's a 120-minute chart. No, look, we just did exactly the same thing in my chart that I was looking at here, right here. Look, there was the double top. Here's the big cup formation, double top, and it broke out. Same thing, makes no difference what you're looking at, because a pattern is a fractality of human nature. It is a pattern that is liable to be repeated in all time frames. So those are the factors that I'm looking at. And if you look at the Dow, it's gone above the two automated resistance points in the 120-minute chart of 25,819, 25,846, and 25,863. We're at 25,892. Smash through it. When you smash through what should be threefold repellent zone, that's very powerful. Okay, question. What's the count on Microsoft? Now, this is very important because Microsoft, let me show you something. I've shown this before, but I'll do it again. Microsoft is at, let me get rid of this here. It's in leg A, B, C, D, E, leg E in the 120-minute chart. But this is a brand new leg G/C. It's just way above the left side high in the 112 area, 113. It's at 117.14. Look what happened in the weekly chart. It took out the V-shaped pattern left side resistance at 116.18 the week of the 5th of October. It dropped to 93. I'd say that's 23 points. That's a pretty big decline, but it's now at a new recovery high. It turns out to be at a new all-time high in leg C in the weekly chart, and now you've just broken out in F/B in the monthly, and these Chapman wave instant restarts, these little minor peak Ds with a 2-bar reversal with a second bar or third bar pushing to a higher high, have all almost to a chart turned out to be an instant restart. So this could be leg B up in a brand new move in the Microsoft. Now look at this for Microsoft, trading at 117.15. I'm going to squeeze this chart. Squeeze, remember squeeze the shaman? Look at this huge bowl formation. Look at that bowl formation. The all-time high, I think this is, there must have been a split, but at one point, let's call it 53.97, December of 1999. That was the high. And it plunged down to $14.87 back in 2009. I think, yep, back in March, at the March low, 2009, it went to 14.87. Now you can almost multiply that by 10. This is incredible action. Not only has it gone to 117.08, it is now more than double the high of 1999. Its all-time high at that point is now double that. Very impressive. Microsoft, and the question was, should Microsoft be replacing something like a GE? Well, you know, they have the habit in the Dow to change things when they're at highs. And then what happens is very soon after that particular stock takes a real dive and impacts the market negatively. Eventually, it all evens out, but their timing is not usually good. Basil Chapman, Tiger Conditions Hour. Dow is up 177. Let's see if it's pulling back from that little mini top there. Yes, just a little bit. I'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. Just near term, we've just made a little peak D in the 2-minute chart and a leg F in the 5-minute, and that's leg C has gone on since 11:30 this morning. Every bar has had a higher candle wick, so this is still leg C. I think we're real close to at least a peak C coming up, and then maybe there'll be a D, and then maybe we'll start to see a little bit of a pullback. Who knows? All right, let's get back to our story here. Couple of questions. XRT, yes, the XRT is very important to look at. Why? Because it's making that arch formation that we talk about, the lowercase h. Let me just draw it in right here. You got this, you got that, and you've got that. And as long as there is a pullback, you're going to be looking at a test of the left side. Okay, it's there. There it is. Right there. So that's this. It's very important. If the XRT trading at 44.50, this is the S&P Spider Retail ETF or fund. It makes a peak A minus and it closes underneath 43.97. That's going to be a sign to say, be careful. Some of the retail areas are not doing that well. So that means let's go and have a look at Amazon. Amazon right now, Amazon trading up. Trying for leg D, it's 1705. It needs to go above 1709.43 for leg D daily. And that would also start to make a C in the weekly chart. That'll really help. It needs it. It's kind of been lagging. It's had a really big digestive phase. We've been talking about this since back in September. I said, I think the FANG stocks are going to take a breather, and it's time and price. Maybe it's more time than price, but I think it could be time and price. Well, it goes from 2050 down to 1070. Now it's trading at 17. Sorry, did I say 1070? It should have been 1307. Sorry, 1307. And now it's trading at 1706. So a good rebound, but it hasn't really garnered enough to say that it's in a very strong buy mode at this point. Let's look at Apple. I'll just look at these two. Apple right now. Oh, Apple's been leading the way for the last 5 days. The last 6 sessions, it's been the turnaround stock as the Boeing put pressure on the market. So on the Dow, certainly, Apple was the one that gave relief. It's in leg B in the weekly, but it plunged from 233 down to the 141 area. So at 186, up 40 points. That's fabulous action, but wow, we're only about a third of the way from the top. So it's good action, very good action, and that's important. Now, I was asked about the IYT. The IYT, this is the iShares Dow Jones Transportation Average ETF. Here's the Chapman wave inside. This is the falling axe formation, just touching this inside track repellent zone. Let me just draw it in, make it a little more complex to show you how I like to do things. Right there. Look at that. So now it's on the inside there. If IYT cracks open and goes over the March 13th high of 188.39, 188, yeah, it should, $1.50, it shouldn't be a big deal. That's going to be important. Well, wait a minute. What about the XAL? Well, the XAL is down. It's up 8 cents at 99.35, down for the high of about 110, down to the 96s, and it has bounced to the 100 level. Now it's at 99.35. A cute little bounce, but nothing to write home about. And this is one of the things I was looking at in the whole rotation of the market. What impact will the Dow Transports have on the overall market? And so far, all we can say is we've had a separate thing. And one of the reasons I've been looking at separation in all the different indices is that if you look at the Qs going to a recovery high, you look at the SMH is just breaking out to another recovery high. If you look at the Dow, much weaker, obviously because of Boeing, but if you look at the IWM kind of lagging, you've got this kind of divergence. They're moving up, but they're not moving up in sequence. They're not moving up in proportionality. And that says to me that individual stocks are actually way more important right now. And if you can identify them, if you can identify the sectors, we're trying to do that from opening call subscribers, trying to get under the radar into areas that should progress really well over the coming months, if in fact they start to make some kind of important support level. If you look at wheat is going, yesterday was a nicer candle earlier during my show, then it kind of weakened a little bit, still a green candle, and today it's got a slightly higher high. We want to see these grains. We want to see wheat, soy, soybean, continuous contract. That's a nice candle. And corn, soy is up 8 3/4 at 907. That is nice. And corn is okay. It's looking nice. 4 green candles. That's good. This is a start. We want to see how the market can rotate into these different areas. We want to see how Hack is doing. How's it? Hack is the cybersecurity. Yeah, it's good. It's almost at the all-time highs of 40.72. HACK trading at 40.19, up 26.26. I'm sorry, up 0.66%. Yeah, it's struggling to get back to that previous high. This is important because the prime cybersecurity ETF, you want to see these stocks, you want to see this thing really push and lead up again. Same as I'm looking at sort of just a moment ago, XLK. XLK is the tech sector. Look at that breakout. That is a very strong leg F. I have to say it has all the characteristics, way more characteristics of a new leg B. And the MACD's cross positive, stochastics at 90, and this is continued. This is a single leg A. Can you believe it goes down 24% from the 76s down to the 56s, and then it rallies from the 57 low of the week of December the 28th. And this has not yet made a peak A. This is still there. It looked like the candle from last week. For sure, we're going to make a peak A this week. No way. Look, this is leg A, a single leg A to the upside. I have a whole theory about these single leg A's to the upside. Depends on what they do and how they break out. We can talk about that next week. We'll see what happens by about Tuesday of next week. Yeah, I'm calling it. Yeah, I should put it in just because that's the way I do the notation. F/B. Let's say that must go. Yeah, F/B, very, very strong action. 90% in the stochastic in the daily, 96 in the weekly. That is very good. So we're looking at the XLK coming back very strongly after just a terrible December. Nice action. Congratulations to the XLK, the S&P Select Tech Spider Fund. Question I had about ITA. What is ITA? What am I looking at? I think it's an alternative. Yes, ITA. I don't look at the ITA. I look at the PPA. So it's the same chart pattern, except it's a different index, this is the Invesco Aerospace and Defense ETF, made a high back in, I think I did type it in. No, I didn't. Made a high back in October of 62.18. Plummets down to the 56s and now it's at 57. This is struggling quite a bit. This is the defense area. And that's saying that maybe we're putting on the brakes with that whole defense thing. Very interesting. I'll be back straight off with these important messages.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Yes, so Dow's up 211, really good action. Look, it's just bumping into that trend line resistance right now. This is very, it doesn't matter that it's options expiration. Fact is, the price is the price, and that's it. So options expiration, yeah, thank you over there for reminding me. We did have a really good trade. We don't do options very often. We did have an option trade back in December, January, which went to the options expiration third week of January. And we did have a 40 to 50% gain in that option. Those people who held it all the way through to the actual expiration had more than 100% gain in the option. So, yeah, it depends on how you do this. But in the meantime, back at the ranch, what we're looking at is, if you're looking at the weekly chart, there is still this arch formation. The MACD is strong, not as strong as it was back in October, but it is strong, and stochastics at 93%. That's very good, and it held exactly on the 14-period exponential moving average of 25,236. The low this week is 25,208. So it went right to that level and is now bounced very strongly. So this is a very important moment because instead of having this digestive phase, it's kind of been a rotational digestive phase in different sectors. IWM Dow has been digesting more than the others. Others are now broken to new recovery highs. That makes their weekly charts even more powerful. This is very good action. And as far as I can see, this is saying that there's a good chance that on a worst case basis, if there is a pullback next week, we could give back most of the gains, but that 25,650 low that was made, that should be very strong support. So going into next week, this action is saying there are certain sectors that could be picking up steam right now. And if that's the case, you've got that rotational correction and rotational, what's the opposite of correction? Uncorrection, moving on upward. That is really important in a market like this because you constantly want to find areas that can take over when others are weak. And that's exactly what we've seen. So I'm saying that this is very good action. A little surprising on the strength of the upside for me, but at the same time, not complaining. We have enough longs to be enjoying this. So have a great weekend. Check out my opening call. It's my daily newsletter. Go to the front page of TFNN. Stay tuned for Steve, Dave, and Tom. Have a wonderful weekend. See you Monday, and thank you for being here.